Hello everyone. I hope all of you watching this video during this lockdown are safe at their homes. This is CA Nabin Agrawal and today I am here with a topic for you, that is basics of composition levy under GST. In this video, I will be explaining the meaning of composition scheme under GST, eligibility criteria to opt for this scheme, non-eligibility, that is who cannot opt for this scheme. We will be discussing the GST rates applicable to a composite taxpayer. Further, we will be discussing various returns and forms that are required to be filed by a composite taxpayer. And lastly, we will be discussing about certain recent updates which has been brought into force by CBIC in view of outbreak of COVID-19. So let's get started. So what is a composition scheme? A composition scheme is a scheme which offers a registered person an option to pay tax at a fixed rate on outward supplies regardless of the actual rate of tax applicable on the said outward supply, with an objective of simplifying the tax compliances and reducing the compliance cost. So ये composition scheme क्या होती है? ये एक स्कीम है जहां हमें अपने आउटवर्ड सप्लाईज पे एक पर्टिकुलर फिक्स्ड रेट ऑफ टैक्स ही पे करना होता है, irrespective of the tax rate applicable to the said outward supply. For example, if we talk about a trader supplying goods on which prescribed rate of GST is 12%, but if he has opted for composition scheme, then he will have to discharge output liability of fixed composite tax rate only, which could be either 1% or 5% or 6% as applicable. Now, what is the objective of opting this scheme? The main objective of opting this composition scheme is that there are lesser tax compliances and hence compliance costs are reduced as well. Moreover, a composite taxpayer cannot charge GST from their customers. Hence, customers usually get the benefit of the cheaper products when they buy from a composite supplier. Now, let us move on to the eligibility part. Who can opt for a composition scheme? Before discussing this, let me tell you that there are two types of composition scheme. One is composition scheme for all, which is given under section 10 subsection 1, and another one is composition scheme for service suppliers or mixed suppliers, which is given by the notification number 2/2019 central tax rate dated 7th March 2019. Now let us discuss this one by one. Composition scheme given under section 10 subsection 1. This scheme is for range of businesses in the manufacturing sector, service sector, as well as traders whose annual turnover in the preceding financial year did not exceed Rs 1.5 crore. This threshold is just half for certain specified states like Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura and Uttarakhand. So, this scheme is generally for manufacturers and traders. However, sometimes they also happen to supply certain services. As this composition scheme was not available for service providers, so these manufacturers and traders were not able to avail the benefit of this composition scheme. Hence, the CBIC came up with the certain relaxations for these manufacturers and traders, and hence these manufacturers and traders now can also provide service, however only to the extent of 10% of their turnover or Rs 5 lakhs, whichever is higher. Now, let us discuss about another composition scheme which is given by notification number 2/2019 central tax rate dated 7th March 2019. This scheme is for service suppliers and mixed suppliers whose annual turnover did not exceed Rs 50 lakhs in the preceding financial year. So we can say this scheme is for service providers other than the restaurant service providers who are providing services exceeding 10% of the turnover in the state in the preceding financial year or rupees 5 lakhs, whichever is higher. One important thing to note here is that PAN-based turnover shall be taken into consideration to calculate the threshold and determine the eligibility to opt for this scheme. Now, let us move on to the non-eligibility part, that is, who cannot opt for this scheme. First is non-resident taxable person or casual taxable person who are not eligible to opt for the composition scheme. A non-resident taxable person is a person who does not have a fixed place of business in India, and a casual taxable person is a person who does not have a fixed place of business in that particular state where they have opted to take registration from. Next is business engaged in interstate supplies. That is, if you want to make interstate supplies, that is supplies from one state to another state, then you are not eligible to opt for this composition scheme. Next is businesses supplying goods through an e-commerce operator. So if one wants to supply goods and services using an e-commerce platform, then he is not eligible to opt for composition scheme. Also, manufacturers of ice cream and other edible ice, manufacturers of pan masala, tobacco and tobacco substitutes, and manufacturers of aerated water are not eligible to opt for this scheme. One important thing to note here is that only the manufacturer of these products are not eligible to opt for this scheme. Hence, if you are a trader and if you are trading in these products like ice cream, pan masala, tobacco and tobacco substitutes or aerated water, then you are eligible to opt for composition scheme. Now, we will be discussing about the GST rates applicable to a composite taxpayer. For eligible manufacturers and traders, composite GST rate is 1%. Eligible manufacturers here means those who are not involved in the manufacture of tobacco and tobacco substitutes, ice cream, pan masala and aerated water as discussed above. If we talk about the restaurant service providers not serving alcohol, then composite GST rate for them is 5%. For rest of the service providers or mixed suppliers who are not eligible to opt composition scheme under section 10(1) and who have opted this scheme by virtue of notification number 2/2019 central tax rate dated 7th March 2019, composite tax rate for them is 6%. In the above rates, 50% is towards CGST and the balance 50% is towards SGST. Now, let us discuss some of the important forms or returns that are required to be filed by a composite taxpayer. There are several forms or returns which is to be filed by a composite taxpayer. However, we will be discussing some of the main forms or returns that is to be filed by a composite taxable person. First is Form GST CMP 02. If you are a normal taxpayer registered under regular scheme of GST and now you want to opt for composition scheme, then you will have to file this form GST CMP 02 before the beginning of the financial year. If one is registering for the first time and wants to obtain the registration as a composition taxable person, then he can obtain such registration by filing form GST REG 01 only. Next is form ITC 03. If you are a normal taxpayer registered under the regular scheme of GST and now you want to opt this scheme, then you will have to reverse the ITC which is contained in your underlying stock of raw materials, semi-finished goods, finished goods or capital goods. This form is to be filed within 60 days of the beginning of the financial year. Form GST CMP 08. Every composition taxable person is required to discharge his output tax liability on a quarterly basis, and he can do so by filing form GST CMP 08. It is a statement of self-assessed tax and it is to be filed by 18th day of the subsequent month of the quarter. Next is form GSTR 4. This is a return for a registered person for opting composition levy which is to be filed annually by 30th April of the subsequent year. Last is Form GSTR 9A, which is the annual return and has to be filed by 31st December of the subsequent year. Lastly, we will discuss about certain recent updates which has been brought into force by CBIC in view of COVID-19. Here, CBIC has revised the due dates of certain forms returns which are required to be filed by a composite taxpayer. Form GST CMP 02, due date of which for financial year 2021 was 31st March 2020, has now been revised to 30th June 2020. So, if any business registered under the regular scheme wants to go for composition scheme for financial year 2021, then they can file this form by 30th of June 2020. Similarly, for Form ITC 03, the revised due date is now 31st July 2020. For last quarter of financial year 1920, Form GST CMP 08 was supposed to be filed by 18th April 2020. However, due to this COVID-19, this due date to file this form has also been revised to 7th of July 2020. Consequently, the due date of Form GSTR 4 for financial year 1920 has also been revised to 15th July 2020 from 30th April 2020. Form GSTR 9A, which is the annual return for composite taxable person, now they can file this form till 30th September 2020. So, this was all about basics of composition levy under GST. In case of any query, you can reach to me at the given contact number, or you can also mail me at nabin.agrawal01@gmail.com. With this, I will take a leave. I hope this video finds you all well. Thank you.